Should your business be an LLC or a sole proprietorship? If you're self-employed and never filed any paperwork, you're already a sole proprietorship by default. No forms, no fees, but also no protection. If a client sues your business, or a vendor goes after unpaid debt, they can come after your personal savings, your car, even your house. That's the core trade-off. An LLC, a limited liability company, creates a legal wall between you and the business. If the LLC gets sued or goes into debt, in most cases only the business's assets are at risk, not your personal property. Say you run a dog walking business and a dog gets loose and damages someone's yard. Without an LLC, that claim can reach your personal bank account. With one, it generally stops at whatever the business owns. So why doesn't everyone form an LLC immediately? Cost and discipline. Most states charge a filing fee to create it, and some charge an annual fee just to keep it active. Forming one usually means filing what's called articles of organization with your state, naming a registered agent, and getting a free tax ID from the IRS called an EIN. None of that is hard, but it's still more than zero paperwork. You also have to keep business and personal finances genuinely separate, a dedicated bank account, real records. Mixing the two is one of the fastest ways to lose the protection entirely, even after you've paid to set it up. On taxes, by default an LLC is treated exactly like a sole proprietorship if you're the only owner, or like a partnership if there's more than one of you. Profits simply pass through to your personal tax return, there's no separate corporate tax. The LLC is mainly about liability, not about saving money on taxes, unless you elect S corporation status later, which is a completely separate decision with its own trade-offs and paperwork. So when should you actually make the switch? A few common triggers. You're taking on clients or customers where something could realistically go wrong, property damage, an injury, a bad outcome you could get blamed for. You're bringing on a business partner or your first employee. Or the business is generating real income you genuinely can't afford to risk personally. If you're just testing an idea with close to zero risk exposure, staying a sole proprietorship costs you nothing and keeps paperwork simple while you figure out if the idea even works. One myth worth killing. People think forming an LLC makes them bulletproof. It doesn't. Courts can still, quote, pierce the corporate veil, reach straight through the LLC to your personal assets, if you don't treat it like a real separate business. No separate bank account, no records, paying personal bills straight out of company funds. The protection is only as strong as how seriously you actually run it, on paper and in practice. This is general information, not legal or tax advice. Talk to a professional before you file anything.